Hope everyone is doing well. This is going to be a video over June the 22nd. Coming into the day, the market has been selling off and it's probably going to start to go sideways and likely test the May 22nd low, which is 3,800. Market gap down and it gapped below the prior day's low. And well, let me back up first. First, you had a trend from the open, 60% chance when you get a trend from the open, the market forms a trading range or a trading range day. And 20% chance the day continues as a trend day or has a trend reversal day. So something like 60% chance we had a trend from the open sideways. Here, trend from the open, but lasted all day. That's more of a 20% chance. But if you just look back, most days, here, trend from the open, but really went sideways. Even though it kept selling off, that's sideways for several hours. So that's pretty common. 20% chance, big sell-off, continue down. Let's see another trend from the open, but trading range. So the bulls had a strong 2-3-legged rally. You can call it a parabolic wedge. 1, 2, 3, broke above the prior day's high. Usually when you get a move that's this strong, it's too far too fast and the market will have to go sideways. Let's go over kind of bar by bar. Let me do this. First bar of the day, gap down, probably buyers somewhere below. May have to test up to the high of bar 1 before we go below it. So bulls will buy the close, hoping that the day will have some sort of trend from the open, consecutive bull bars. Some bulls will try and buy some sort of pullback, but not a good sell, not really a great buy either. The risk is big, so I imagine a lot of traders will buy and start scalping out. Doji bar, so traders bought, they bought a pullback, scalped out. Other traders sold up here, scalped out. Bull bar closing on its high. Somewhat of an inside bar of the first bar. Is it always in long? Probably. Bulls see a failed breakout of this low and want a double bottom. Test of yesterday's close. And a strong rally. So it's an okay buy above, but stop below. Maybe you can put the stop here, but not ideal. Another bull bar, starting to get 3 out of 4 bars, bull bars, so probably going a little bit higher. May get an upside breakout, so again, but it's not clear yet. And we tested the close of bar 1, big outside up bar, always in long, but the stop's big. Most traders would probably use a stop down here, but that's still several points away, 34 points, 57. It's a 20-point bar, so traders taking it have to trade small. Probably going to go have a second leg up. Disappointment bar, is it a wedge? 1, 2, 3. Probably not. This is a strong enough bull breakout that the market's probably going to have a second leg up, even if the pullback's steep. And the pullback could be all the way down to here. There were bears that sold this. They sold this high, made money. So they sold bar 1 during the close of this bar, 8:50 Central Time, and the market sold off. Big bull bar. Sorry about that. So we may test lower, close the gap, so a sign of trading range price action. Big bull bar, closing on its high. So it's a high 1 buy, similar to yesterday, but this is more drawn out, but it's kind of the same thing. Trend from the open, high 1 buy, trend from the open, high 1 buy. It's an okay buy. Some probably stop below here, betting on some sort of second leg up, maybe a test of 7,800, test of yesterday's high. Bull bar, consecutive bull bars, so a strong breakout. Possible 3 pushes up, 1, 2, 3, but strong enough that bulls will probably buy any pullback. Let me zoom in a little bit. It's kind of distracting. There we go. It's important not to pay attention to too many bars. I'm looking at the chart. So 3 or 4 consecutive bull bars, it's by the close, probably going higher, but again, need a wide stop. You could have a deep pullback. It's a pause, so it's by the close, but once you get a pause, you may go a little bit higher, but may not go that much more higher before there's a pullback. There we go. Bull bar breaking above these highs, but again, probably a pullback likely. It's minor, so it's not really a good short. Traders will sell up here betting on some sort of pullback, but they're using wide stop and scalping out. They're not swing trading. And there's reversal down. It's consecutive climaxes here, 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 and here. You can call it a wedge top. You can call it a low 2 here, bull breakout, and 2 or 3 pushes up. You may get a deep pullback, so traders buying here probably need to stop all the way down here. And that's over 40 points away. 3 consecutive bear bars, probably not worth buying up here. Bear breakout, and then a bull bar. So it's two-legged pullback. I'm going to try and do this. There we go. Trying to make it easier to see. Two-legged pullback. That's better. So two-legged pullback, not quite 50%. Probably going to test back up to here, so it's probably buyers in this area. So it's a reasonable buy stop below. And just as this was by the close up here, you'll have by the close bulls who, instead of getting out, bought more lower. This is their break even. They may be disappointed enough. You'll always have some traders who will just be disappointed and they'll get out break even. The odds are we're going to test back up to here, but it could take a really long time. So this is a resistance level. Theoretical bulls will buy here, buy more lower, get out break even. Other bulls, they know this is a magnet, so they'll buy down here and just get out right there, betting that we might get a second leg and they could buy again. So there's that test. Big bull bar, but doji, 3 pushes up, 1, 2, 3. Wedge top, possible double top here, tested this high. And bad signal bar, but it's a wedge top, so may get a couple legs sideways to down. Big bear bar, follow through, possible double bottom, but strong enough. Bear surprise, may get a second leg down, kind of like this, strong enough, may get a second leg. 3 consecutive bear bars. The bears want some sort of measured move, something like that, but the problem the bears have is 50% pullback somewhere down here. So this is going to be support. Breakout followed through 4 consecutive bear bars, probably at least second leg down. There's your first leg, second leg. It's important to note this bar. The bulls, they're buying below bars. They made money, so they bought this low scaled in. They made money. And that also means that the market may bottom soon. So bad stop entry below, probably buyers below. Doji bar, 3 pushes down, 1, 2, 3. Two-legged pullback. Close the breakout point here. 50% pullback. So this is in the buy zone. So bulls will start buying using wide stops and willing to scale in. Bull bar, follow through bar. You can call it a double top, second entry short with here and here. But after this breakout, probably at least second leg up. And now we have a bear bar, but tight bear channel. Is it a wedge top? Probably not. Profit taken from this buy, so some bulls will buy here, and instead of getting out, they'll buy more lower, getting out break even at their first position. Breaking above a possible bear flag, and it failed, so you have a wedge top, 1, 2, 3. Failed breakout of a wedge top, turn down. You have another wedge, 1, 2, 3. Probably buyers somewhere in here though. And again, there's an obvious magnet up here. And I think it's going to be hard. We haven't, and the reason I say that is the bulls never had a chance to get out break even. So kind of like here, sell the close, disappointed, get out break even. That allowed the bears to get out. Here, this is a very strong rally, and the bulls never got a chance to get out break even, which makes me think they will get that chance to get out at break even. IOI, second entry buy. It's an okay buy if you're betting on a test of the high close, consecutive bull bars, and big bear bar, but again, tight bear channel. Bears trying hard to reverse the market, but doesn't look like they're going to be able to do it. And then big bull bar. So big bull breakout, but trading range. So this may fail. Strong enough, surprise, make it a small second leg. There's the pause. There's the second leg. So some bears will start selling, betting that this is going to fail and that this is exhaustion from this rally. Some bulls bought more lower. They're going to be disappointed, probably get out, betting that this probably is a failed breakout. Big bear bar, follow through bar. You can call it a double bottom with here, but strong enough bear bar is probably at least second leg down. Bears trying to form a bottom with this higher low. Tight enough channel that even if we get a deep pullback, probably a second leg down, which the bears got. And bears got a bear breakout late in the day, followed through bar, and sold off into the close. But typically, when you have sell the close and it's pretty late and you're near support, what traders will do is they'll sell closes and look to scalp out. So they'll sell once price goes 5 points lower, 10 points lower, and just take profits, anticipating a reversal into the close, which is what happened here. So overall, trend from the open day that transitioned to a trading range. Whenever you see this rally and then you see this deep pullback, odds are the market's going to go sideways, and it's usually going to go further down than what traders want. And the rally, so it's usually going to go down further than what traders want. The stop entries in a trading range are never that clear. So you have a buy here, but it's above a bear bar, and then you get a strong bull bar, but it's forcing you to buy at the moving average. But then if you buy at the moving average, the market starts to go sideways. So very typical trading range price action. Probably the best trades of the day. For always in, it's always in long here, maybe here. Clearly always in long here, but you need the wide stop down here. 50% pullback. No reason for always in traders to get out here, but they'd probably get out below this bear bar just with how strong this is. Some bulls will buy here, but again, probably second leg down. So if they are buying, better if they can get out and scalp out in the upper third, anticipating a trading range. Probably not always in short, but some bears will sell, betting on a second leg down. Bulls, they can buy here, but stop placement's tricky. They probably would use a wide stop, but you can trade a half size position, get stopped out, trade a full size position. Other bulls will wait and buy above here. No reason to shorten here, but it's hard to stay long. Big bull bar, a lot of bulls would take profits on this bar. If they didn't, they'd get out below there. Aggressive bears would sell. You can sell here, but again, you may just get a two-legged pullback and then a retest of the high, so not very clear that it's always in short. Probably not a good buy. Tight channel, top of the trading range, may get a second leg down, but if bulls did buy, they get out below there. Aggressive bears sell, and if they sold this close, or if they're just short from up here, probably get out above the bull bar, so above this bar. Otherwise, they just get out somewhere down here, maybe on this close. Hope this video helps.